Hello again, everybody. This is my second video on investing in stocks for dividends. As you can see, it's investing in stock for dividends part 2. Knowledge is profit. In this episode, I thought we might talk about some of the terms and definitions involved with dividends. There seems to be a lot of confusion and myth about what dividends are and how you get paid for them. So we will start off with terms and definitions. A dividend, a sum of money paid regularly, typically quarterly, to share or stockholders out of a company's profits. This is a very simplistic definition. It's one that I believe gets right to the chase. It is basically a division of a percentage of a company's profits, and it is paid to the share or stockholders, which we found out in my last episode. A shareholder or a stockholder is somebody who actually owns title or deed to a company. They are literally an owner of the company. Therefore, when the company profits, that is divided up amongst all the owners. That is what a true dividend is. Now, the next thing we want to go along with that is what they call the ex-dividend date. This is a date typically 2 days before the record date, in which whoever owns the stock on this date gets the dividend payment for that quarter. I like to call this the own by date to get paid. So when you start researching a stock, you will find out that they will show what the dividend of a stock is if that particular company divides its profits amongst its owners. They will also show you the ex-dividend date. This is important as you need to purchase the stock prior to this date to get the money for that quarter. Every quarter there is an ex-dividend date. You must own the stock on that date, and usually a couple of days after, to get the dividend. Then you can sell it if you want to. Where we talk about the record date, a record date is the date following the ex-dividend date where the share or stockholders are officially recorded by the company and set to receive the payment of dividend. So the companies kind of give themselves a couple of days for everything to settle, for the purchases and sales to go through, so that on the record date, everything is done, and whoever is the owner will go down in the book and be set to receive their dividend. The next term I would like to talk about is, yes, the dividend pay date, and it is in green for a reason. That's the day you get your money. This is the date that the company will pay the dividend to the share stockholders who own the stock on the ex-dividend date. This date is usually within 1 month of the ex-dividend date. This is very cool. A lot of times it's 10 days from you'll go through the ex-dividend date, 2 days later the record date, and anywhere up to 30 days after that you will get that quarter's share or dividend, or your payment of profit being an owner of the company. These are important terms to remember when you're doing dividend investing. So we get there, we know what the ex-dividend date is. We got to own it by this date. They're recorded on that date. Within a month, they're going to pay us. Now, I keep getting this a lot. People are like, well, how do I get started? I don't even know how to get started. Okay, these are very simple steps. The first step is you should open up an online trading account. All the ones I checked into that do online trading are 100% free to set one up. There's no charge whatsoever. There's no deposit you have to do. You can literally go to one of these. I put these two up there, TD Ameritrade. I have a Roth IRA through them, as well as just a normal trading account. And I also use Robinhood because some of the people that were following me have Robinhood accounts, and they were asking me questions about what does this mean, what does that mean. So I literally went in and set up a Robinhood account, and then shortly thereafter put some money in it just so I could see how it worked and help explain things to people to get them started. Excuse me. So the first thing is go online. Go to Google, Yahoo, whatever it is you use, and search for TD Ameritrade, Robinhood, Charles Schwab, Fidelity, Acorn, whatever one it is you want to use. Google it and go right on, and it'll say, do you want to set up an account? Yes. And then it will ask you questions, and you'll go through the questions, fill them out, and you'll create a username, a password, and boom, you'll have your account set up. You can actually start watching stocks, set up a watch list, start to research stocks for free. No money involved in this. The next step would be to determine how much money you can afford to deposit from your weekly or monthly budget. This is completely and 100% up to you. There is never a minimum that I've seen. You can deposit $1 a week, $1 a month, $1 a year. You can deposit $10,000 a week. Whatever you can afford to deposit. Use it more like a savings account as far as the trading accounts. I would recommend, especially to young people, get you a Roth IRA while they're still out there. One of the advantages to a Roth is that the money that it makes in dividends and capital growth when you turn 59 and a half years old, you can start drawing that money out tax-free. I know that doesn't sound like a big deal. You don't get no tax write-off when you put the money in the account. However, over a period of time, and if you get a good dividend strategy going, when you turn 59, you can literally just start drawing the dividends off of it and never sell your initial stock. So, there's no minimums. Just start putting some money in there, whatever you can afford. $2 or $3 here, $2 or $3 there. You can actually buy stuff like Ford stock for around $8 or $9 a share. So even if you could put, say, $5 a week in every other week, you could buy a share. They do pay a dividend of 15 cents per quarter per share, so you can return money fairly quickly. There's a lot of stock that's around $15 a share, and it goes on up. But just start with something. No matter how small of a deposit you make, it is something toward the future. Start depositing the money in your account. That's important. Then try to be consistent with your plan for saving or investing. Don't say, well, I can put $10 in, and then you put 10 in, then you put 3 in, then you need 5 back out. If you can put $2, put $2 a week in. Do a consistent deal. It'll eventually get to where it's just automatic. You'll put it in there and you'll start to buy stock. Part 2 is, how do I get started? Here's things that I look at when I look for a stock. Do they pay dividends? If they do not, I move on. I'm done. I am not putting my money into something that is not giving me a return back. I don't buy stock based on, oh, I think this stock's going to go up in the future, because that to me is like putting my money in a machine. One-armed bandit, if you will. You pull the slot machine handle and you just hope that the numbers come out right. Dividend investing is based on factual profits of a company, their model, their CEO, what type of a record he has. Dividend investing is mathematically the way I will always invest in the future. I don't want to gamble. When I want to gamble, believe it or not, I just go to a casino because I know I'm probably going to lose money. This, I do not plan to lose money. I always plan to make money as an owner of the company, a good company that is profitable and shares their profit with their owners. I look at their dividend history. You can go on Seeking Alpha and literally look at the dividend history of any company that pays dividend. It'll go back as up to 20 years, I believe. You can see if the dividend's constant, which is the very next point I got up here. I check for consistency, the possibility of increasing of a dividend payments over history. If it's a good company, they have a good profit range. They look like they're going to be profitable in the future. It's something that people need and or want. They a lot of times will actually increase their percent of dividend as time goes on. The company becomes more profitable, so they share more and more of the profits with the owners. I look at the current trading price. Yes, I am always looking to buy at a good price, so I get more for my money. However, this is not the deciding factor for me. I have bought some stock that maybe was a little high, but I wanted to get them. I know that their dividends are going to be good. I watch them. If they happen to go down below where I bought them at, I actually buy more, and I what I call dollar cost average down. So I don't look at each price. I look at the cumulative price. I buy so many shares. I bought the first share at $20. The next share I bought at $10. So now I'm at $30 for 2 shares. So my price per share is actually at $15 per share. So these are things I look at. When I plan to buy a stock, I'll be more than happy to look at any company you want me to look at. I will help you get to the Seeking Alpha website. It's very easy. Google seekingalpha.com. Set you up an account there. It's free. They need an email address. Basically, they will send you updates on stocks that you're watching. So there are a lot of things that you'll want to look at in the future. This is actually my trading account on TD Ameritrade. You can see back in August, I started off with $100.92. I continually added money just as I could. I definitely was into the dividend investing. I was not into speculation. I got this account up, and you can see there's drops where the account actually fell in value. I did not care. The value of the account is not that critical to me. It's the number of shares that I own and how much each share is going to pay me a quarter or a month in dividends. You can see at one point I had the account up to about $4,126, and then you'll notice these couple of big drops right here, one right there and one right there, and I brought the account back down to $916. Those big drops weren't market loss. I had a couple of credit cards I was paying a high interest on, and I wanted them paid off. I didn't want to mess with them anymore, so I used this like a savings account. I sold some stock. I went and paid these off. They're no longer on my bill, and now I'm going to start putting money back in each week, buying dividend stocks. That's all that I'm going to purchase. I will go to the transactions page. This is, like I said, a TD Ameritrade account. I'm going to go to dividends. This is a filter. I will go back to August. Click view. These are dividends that I have literally been paid from August all the way up to December the 2nd. You can see I got my first dividend of $24.78. This is back in August when I just had a few $100s in the account. After that, I started receiving payments fairly regularly: 79 cents, 37.49, 3.25, 3.40, 15.12. I literally am almost getting checks every week, sometimes 2 or 3 a week. Today, as you can see, I got 1, 2, 3, 4 dividend payments today. Now you'll see that I got $366 here from Energy Transfer, and then you'll see I bought not even a whole share, 0.322 Energy Transfer at this price. That's called Dividend Reinvestment Program, or DRIP. Every time I get a dividend right now, I have it set up, and it's a setting in this page where it will automatically buy the same stock that just paid me a dividend right then. This increases it. Now, the next time this company pays me, they have to pay me this $366 plus the dividend on this 0.322 share that I bought. So this dividend automatically goes up every time they pay me, as long as I do the direct reinvestment program. And I would recommend it. You can see here, right here, I got an ordinary dividend from DNP for $6.05 on 10/14. This is a company that pays monthly. On 11/14, I got another dividend payment from them for $6.66. This went up 51 cents in 1 month. Not because I added more to it, but because they took that first dividend and bought another part of a share. Well, then when the next dividend comes out, I get it on the shares that I originally owned, plus the part that the dividend reinvested. So you can see that each month, this is automatically going to go up, even if I don't add no more money to it, because it's adding money to itself. This is very important. When people say, oh, well, investing's hard, it is. It is some research. There's some work to it. We tend to get gathered up in groups. We research stuff together. These dividends is money you can make if you will open up an account and start slowly investing some money. You'll be welcome. I'm going to show you right now all of my holdings. You can see right here, I own EMO, Clearbridge Energy Midstream, AMPY, Amplified Energy Corporation, Energy Transfer, Common Units, VER, it's a real estate investment trust. I own the F version of the stock, which is a preferred stock. You don't have any voting rights. It costs a little bit more, but you're getting a higher yield on your money. DNP is a select income fund. It owns multiple stocks. The fund is managed by a finance manager, and the fund is put together to simply create a monthly dividend. This is the one where I got $6.05 1 month and $6.66 the next month. KEQU, a Kewanee Scientific Corporation. They build medical furniture for like doctors' offices and hospitals. GLQ, Global Equity Fund. It is another exchange traded fund where there is a holding of several different companies. It has a money manager. They pay a monthly dividend. It's good to have a few ETFs mixed in your portfolio. THW, Tokyo World Healthcare Fund. As we have an aging group of people in the world, the baby boomers and whatnot, this healthcare fund looks like a good way. It's got a decent yield to it. It's going to be around for a while. This is one of my favorite ones. Not that I drive a Ford, but Ford Motor Company. You can see their stock price is $8.99 a share. They have a very good yield. I'm going to go to their actual detailed information. So you go here, you can buy or sell them. You can kind of see what their price is. You go to the tabs, you can click on their news, the social signals, charts, earnings. You can see what they're claiming for their earnings for the year. There's a lot of information to be had right here with these guys. Now look, as I'm telling you this, I always say, one of the first things I look at, do they have a dividend? Go right here. They're all going to be laid out the same. Annual dividend yield. So their annual dividend is 60 cents per share this year. The yield is 6.62% of the $9.01 per share rate they're at today. They have an ex-dividend date. Theirs was October 21st, 2019. They will do that again in 3 months. They will have another ex-dividend date. So these here are the things I look at when I start out. We'll go back. That was Ford. Here is ISD, a premium high yield bond fund. I do recommend that everybody get a few bonds. I like the government bonds. They don't really have a very high yield, but this is a fund, so it does come with a decent yield because it has several different bonds in it. CTL, Centurylink, is a cable internet provider. There's one thing I know about people and their entertainment is they always are going to have it. I'm going to say CenturyLink's going to have to move into the streaming world eventually, not so much into the cable, but they are into internet, and the only way you can stream is internet. Therefore, I think they're going to be around for a while. PEI, Pennsylvania Real Estate Investment Trust. They own some pretty good sized shopping malls. They're making some very forward progression with their type of mall, bringing the kids of the 80s back into the malls, which we're now in our 50s and all of our kids are grown up and we have money and we want to go back and I guess relive the childhood a little bit. So they're saying a lot of people are going back to the malls. ACV is a diversified income convertible common shares beneficial. It is a exchange traded fund. Once again, I like that they have a lot of these have a monthly pay rate. They're not super expensive, $24.23 per share. They have a fairly decent moat. I always go look at their what their holdings are. I just don't buy them because they got a high, especially a bond ETF. I don't just buy them because they have a high yield. I want to know what their actual holdings are. So these are the stocks that my everyday account is invested in. As you've seen, all the dividends I'm collecting. Now here's the thing. You can look over here at this and it'll say gain in dollars. Oh my goodness, I'm down $2.90 on the original purchase. That's not good. I'm down 79 cents, $1.28, $9.55. Oh, you're down, Dave. You're losing money. You're losing money. I don't even care. I am looking at the quantity of stocks that I have, and then I look at what the dividend of each stock pays me. That's what I'm looking for. I am just not really interested in what the actual price is. Now, I might buy more of, say, let's say this one here, I'm down $9.55. Well, I bought it. When I originally bought it, I bought it at, I see, I need to reset this. There's a setting on here, and I'll reset it for the next video. It'll show you what you paid per share and what it's actually trading at per share. And you can see that there's a separation. If it's went down, you buy more shares. This is a critical thing. I want to make sure everybody understands this. During the 2009 market fall, when everybody was selling all their stock because they were losing value in their account, there was a guy who worked for Charles Schwab, and he literally was buying it hundreds of thousands of dollars a week, a month, buying stock while everybody else was selling. Because one thing I know about the stock market is it's going to rebound. It's going to come back up. And if you can buy stock when it's down, you're getting more shares that are going to pay dividends at a cheaper price. At the end of the day, that's what I'm looking for when I'm buying stock. I want to get as many shares of stocks that pay dividends in my pocket as I can, so that every month, every week, every day, a company is sharing their profits to my bank account. If you have any questions about the video, please feel free to leave a comment on the YouTube. Subscribe to my channel. I'm going to be putting out more videos in the future to help people get started in dividend investing. If there's anything you want me to look up a stock and do a short video on a stock and their dividends and their history and kind of give an overview, that's fine. I will not recommend that you do or do not buy a stock. As I always say in all of my videos is, it's your money. You make the decisions that you think are best for you. And don't let somebody else blindly handle your money, because I guarantee you they will get paid out of your money whether you make money or not. Always be aware of what's going on with your money. Thank you. Have a good day.